Stay tuned for Retire Your Way with Dale Soutas, a leading financial retirement strategist and the founder of Soutas Financial and Insurance Solutions, right here in Fresno. Every week, Dale discusses pressing financial topics of the week, ranging from reliable income strategies to our financial markets, including Social Security, tax strategies, wealth management, RMDs, legacy planning, long-term care solutions, and most importantly, how to make sure you have enough guaranteed lifetime income to retire your way with choice and dignity. From taxes to trends to total transparency, Dale covers it all. And now, here is Retire Your Way and Dale Soutas. This is Retire Your Way with financial advisor Dale Soutas of Soutas Financial. It is that time of the decade every 4 years. No, it is not election season. It is Olympics season. This time around, it is the Winter Olympics, and we have gold, silver, and bronze medal retirement decisions with Dale Soutas here. Dale, you ready to play some Olympics? What would you be? Would you be the long jumper, like the ski long jumper, or cross country? What do you like?
Let's see. What would I like? I would like the ski long jumper. I like flying in the air.
I like that. I think it would scare. Have you ever actually seen one of those ski long jumps?
Just on TV.
Oh my gosh.
And they seem like they're in the air forever.
There was a training facility once on a vacation we went to, and it was only like 3/4 size. And I was like, holy cow. Not only did I not know how long, but like how steep it was. Oh boy. Well, sometimes the retirement decisions we make can also feel like leaping off a jump.
Or being scary.
Or being scary, right? And you don't want to crash and fall. You don't want to crash and fall before the end. So on today's program, those retirement decisions, and have you give them your medal rankings on there. Also, I know it's a question maybe we have gone down the pathway before, but today I want to see if it's still relevant. When do you know if you have saved enough for retirement? And what are some of the factors that Dale might be able to help you figure out? Also, some more live event questions, real questions from real people just like you. All that more on today's program. But Dale, how are you doing? How are you doing this week? Where are you right now is maybe what I should more specifically ask.
We've relocated to our new office on North Palm, so it's a beautiful office. Let's
quiet, numbskulls, I'm broadcasting.
This is an announcement. In fact, come on, let's throw in the whole kitchen sink here. You are in. Okay, so is everything complete? You still hanging up pictures? You still moving desks around? How's it looking?
Yeah.
You're still figuring out the wiring and everything?
No, the wiring, all of that's great. The furniture is in place, 99%. Pictures are going up. We're just, there's the last few things getting put together, but it's getting there. It looks a lot better. One of the young ladies that works with us here, she loves the paint color. She said to my wife, it feels like I'm in a honey pot, I think is how she put it. So it's comfy, cozy. We're looking forward to making, full use of it.
Nice.
We're still getting a few things in place. It's interesting.
We've got some commercials playing around the state of California. Tell folks about the open house. And again, every now and then we might have to replay a show, but just tell us what's going on with the open house. When exactly is that happening? What are you doing? What does that mean to our listeners?
Well, we just want for listeners, ones that know us, anybody who just like to get to know us, are welcome to just pop in.
Nice. Where are you at?
Where? Okay, we are on 5740 North Palm, Suite 105. So we're just south of Bullard on the east side. There's a Starbucks across the street from our office complex. So you'd pull around behind, that's where you enter. Kind of like the old office we used to have. We had to pull off a Shaw, even though we had a Shaw address, you had to pull around behind. But we're 5740 North Palm, easy to find.
Now, you are doing this open house, so I'm going to interrupt, but I mean, as a financial advisor, and even though with the entire team, it's not like you can do a whole bunch of 60 and 90-minute meetings from people who just drop in, but you don't mind doing the open house for folks to see where you're at, especially
see
here.
Who we are.
See who we are, kind of envision the team here. We're expanding. There's a reason why Dale is having to grow his team right now. Number one, because his advice has been captivating to so many people here in the state of California. But also, we're still in this era of peak 65, more Americans every single day turning 65 in the United States than ever before in history. It's over 10,000, a little under 11,000 Americans a day still turning 65. Now, they're not all here in the state of California, but there's just so many people who need this pre-retirement advice and in-retirement advice, and you've had a lot of people, right? You've got some other folks helping you?
Yeah, my schedule's been packed for years now, and it's time to expand with others who are very capable of doing the same that I do, helping people and the way we do it. So that's what we're looking forward to, expanding that aspect. But I didn't say when the open house was, did I? It's actually February 23rd through 26th, Monday through Thursday, between 8 and 5. So anyone's welcome to come on in. We'll have refreshments, coffee, hot water for tea, sodas, other snacks. I haven't decided what kind yet. Maybe we'll have scoops of ice cream, right? No, I don't know.
I don't know. Well, we'll see. But let's make sure that everybody out there knows they're welcome to stop by if they want to. If you are a current client, come on by and take a look at the new digs. If you just want to get comfortable before your next annual review, or as we are in the midst of tax planning season, if you've been listening to the program for a while and this office sounds like it's closer to you, welcome to stop by. But we also want to let our radio listeners know, because we've been far reaching out in many parts of the state of California. If you don't have the time, effort, energy to make it all the way down to the office area, you're still welcome to call the phone number, set up a time. We can have a consultation over the phone. We can do it over Zoom. We can talk. We can do the same kind of meeting, and you don't have to leave the comfort of your own home. 833-856-1382 is the phone number for you to call to set up your time. 833-856-1382. And the website is still the same, folks. Soutas.com. If you'd like to schedule your own time, you can do that right there. SOUTAS.com. Are you a fan of the Olympics? Do you and the wife watch that at home when it's on NBC?
We might watch a little bit of it, here and there. I tend to. There are certain, like the ski jump, the downhill. Some of that I like.
Yeah, I like the skiing events. I actually really get into the ice skate. I get almost tense for the ice skating gals. Watching them do all those flipping jumps and twisting jumps and so forth. I'm like, I can't imagine the amount of pressure on that.
My favorite is where they take the broom and they're brooming in front of that. No, I'm teasing. It's like, okay,
the curling.
The
curling. I totally understand. Well, hey, let's hop into this right now. As far as gold, silver, or bronze retirement moves, I want you to give some medals, if you don't mind, to some of these thoughts and strategies. There's all kinds of buzzwords in the industry, and everything from the 4% rule to diversification, et cetera, et cetera. Gold, silver, or bronze strategy, in your opinion, making sure that you reduce your risk before retirement. Gold, silver, or bronze for you, Dale?
Well, for most people, that would definitely be a gold movement. They would get a gold medal for doing that. Why? Because I've seen so many people through the years, just like the Baby Boomer Dilemma movie talks about, the 5 years before, 5 years after retirement are the retirement red zone. So the drop of the market can really affect when you retire or your retirement period. If you've already retired and things drop drastically, it could change, your spending ability. You may lose. You just don't want to lose a big amount right before or right after retiring. You want to protect what you have. So yes, a gold medal goes to those who recognize the importance of reducing their risk before retirement as they get closer to retirement.
Yeah. So definitely a gold medal, but I guess it also it makes me think about when, the shifting your portfolio. Is this a year before, 2 years before, to make sure that you can retire when you want to? How soon do you like to review somebody's risk before they're going to step into retirement itself?
Well, it could be any time. I mean, I get ones who are going to retire in a few months or a year or two, but really, 5 years or closer to retirement is the time to start putting our heads together and make sure we've, mapped out a good strategy.
Okay.
You know.
And is there necessarily a cost to come in and review? Hey, you've got these new offices. Are you going to be charging now a whole 25 cents to have people come down into the offices, and maybe a whole $1 to start doing people's portfolio reviews?
Nope, the same charge. No, there's no fee to come in. Doesn't matter how many times we sit down, visit, whether in person, telephone, on Zoom, review your questions. Even if we don't end up working together, you're not going to get a bill. I know that might disappoint some, but that's just how we operate. We don't need to charge for the coaching and even to develop a retirement income plan. Don't need to, don't want to, don't have to. So just relax. Make sure your plan is good, and if it is, we'll pat you on the back and tell you to keep doing what you've been doing.
Mm-hmm.
So no charge.
You can get started on your own portfolio review right now by calling the phone number or going to the website, scheduling a time right there. 833-856-1382 is the phone number, and the website, as always, Soutas.com, Soutas.com. Click on I'd like to schedule my portfolio review. More Retire Your Way and gold, silver, or bronze medal retirement moves that you need to consider when we get back right after this. You've heard the phrase, you don't know what you don't know, and we believe it's especially true when it comes to retirement planning. There's a lot of information out there, and it can be overwhelming and confusing. So how do you know what you don't know? Social Security, RMDs, estate planning, investment risk. These are just a few of the many areas that a financial advisor can help you navigate. But what else don't you know when it comes to retirement planning? Are you aware of all of the tax implications of your investments? Do you know how to optimize your Social Security benefits? What about your long-term care and estate planning needs? We believe that by working with a retirement planning advisor, you can uncover potential blind spots in your financial plan and gain a better understanding of your options. Don't let unknown factors potentially derail your retirement. Call Dale Soutas of Soutas Financial to uncover what you may not know about your retirement future and start your complimentary written financial plan. 833-856-1382. That's 833-856-1382. Or you can write Dale at dale@soutas.com. That's SOUTAS.com.
Stock market losses have you worried? Claim your free portfolio risk report and protection review from financial advisor Dale Soutas of Soutas Financial right now. Call 833-856-1382. If the recent market volatility has you worried about your retirement investments, you're not alone. Right now is the time to take action to protect your investments. Surely markets do not always rise, but if you're in your 50s, 60s, or 70s, you don't have the same time to make up for portfolio losses as you did in your 30s and 40s. Claim your portfolio risk review from Soutas Financial today. Call 833-856-1382 or go to Soutas.com. Your portfolio risk review will provide action steps of what you could do to protect your wealth from current market swings. Get your free portfolio risk review right now. Call Dale Soutas of Soutas Financial at 833-856-1382. That's 833-856-1382 or Soutas.com. That's SOUTAS.com.
For your own complimentary Retire Your Way review, call Dale Soutas of Retire Your Way and Soutas Financial at 833-856-1382. That's 833-856-1382.
Welcome back to Retire Your Way with Dale Soutas of Soutas Financial. Don't forget, you can get started on your own portfolio review just by calling the phone number. We have folks who are standing by. No cost to you. Leave your purse at home. Leave your wallet at home. Just come on in and have a conversation. 833-856-1382. Gold, silver, and bronze medal retirement decisions and moves for you to consider since we are in the Olympic season. How about this? Where do you place this on the medal stand of retirement ideas? Dividend stocks for your retirement income. I'll even expand it, dividend funds, right? Because you could have bonds, you could have stock funds. What do you think about things that are prepackaged for dividends for retirement income, Dale?
Well, they're fine. I mean, dividends can be decent. They can be adding to your, especially if you have them reinvested, can make whatever investment grow. Yet, if you're depending on the dividends as part of your income plan, in other words, what you're going to depend on in retirement, that's not necessarily the wisest thing because dividends can change, up and down. Some companies, especially through COVID, we remember some stopped dividends altogether. Well, I don't want an income plan dependent on dividends because I want people to be able to keep doing what they want to do. Their lifestyle obviously is created or maintained, better to say it that way, by their income, steady income, reliable, predictable income. And dividends sometimes can be unpredictable. So that wouldn't be the source that we, have that dividends come into our bank account each month or every quarter and, live off of that. That's not the way. I would say if you have a good income plan set up, so your income's going to keep growing with inflation, keep going to the female's age 100. That's how I put the plan out too. Then you can have different investments. If you like dividend paying stocks or funds, then have those, but not have them being, I don't want people feeling dependent on what they get from them. A lot of times people come in thinking, their money needs to just grow and grow and grow. That's fine. But once you're retired, you need to maintain what you have. So sometimes the dividend paying stocks and funds can also fluctuate in, the value of that stock or fund. So again, if you have your income plan dialed in and you enjoy investing in different things, that's kind of a hobby for you, fine. But if I don't want you feeling dependent on, creating your own lifestyle from dividends.
Based on dividends. And anything that you would be, so let's say this is a retirement strategy and we're ranking it bronze, silver, or gold. It's also going to be exposed to annual taxes, right? So this doesn't really help you in the tax game because this will count for provisional income with Social Security. This gets added into your entire tax structure, right? So this isn't really something that Uncle Sam is not paying attention to. In fact, they're paying very close attention to this tax-wise, right?
Well, yeah. I mean, your dividends are going to show up as income for that year, correct? So now that's, kicking your income up a little higher. And, depending on how much you have invested that way and the dividends you get, yes, it could push more of your income into a higher bracket or more of your Social Security to be taxable because sometimes people don't realize that once you retire, you start taking Social Security. Not necessarily all of your Social Security is taxable. In fact, the maximum currently would be, depending on if you're single or married and your income, your total income, up to 85% of your Social Security could be taxable, not 100% of it. So again, dividends, may push more of that to the taxable column. Thinking about the opposite, the bond funds. Sometimes people get tax-free bonds and all that, thinking, great, I get all this and I don't have to pay tax on it. But unfortunately, the tax-free interest from those still factor in on the tax return as to how much of your Social Security would be taxable. So it's not truly tax-free if it can move more of your Social Security to the taxable columns.
All right. So I'll give you a final answer on this, give you a moment to think. Gold, silver, or bronze then for dividend stocks funds for retirement income. Where are you going to place it on the metal stand?
I would say silver as long as you have a solid income plan. It could be scarier if you don't, but it would be at most silver. I mean, they have their place. You want some money that can grow. You want the dividends that can help.
But not quite the winner that people think it is on their own.
Right.
All right. Good answer. Good answer there. Hey, folks, we're just having a little fun today since it is Olympic season. Gold, silver, bronze, metal, retirement strategies and things for you to think about. How about this? Where do you place this on the metal stand? Because this is definitely a mindset out there as well. Holding on to a large amount of cash for peace of mind. I'm talking well beyond your emergency savings and so forth. Because there's a lot of volatility and a lot of people don't like the ups and downs of the market. In fact, with the very first question we asked, reducing your risk before retirement, everything over to cash, safety, CDs, and so forth. Gold, silver, or bronze strategy for you in retirement?
Good question. And I do see at times I've had people come in and they've moved everything off the market. They've got it all into the bank in various forms, savings, CDs. I'm getting 4 or 5% on my CDs. Okay, great. But really, if you put too much into just cash, more than you need for the short term, things that come up, because you do need liquidity. So, definitely having liquidity, having cash is wise. But I would say if you're thinking all of it needs to be there, then I don't even think it would get up to a bronze level. But having a proper amount of liquidity or cash definitely is the bronze. You need cash, you need liquidity.
All right. So yeah, the kind of the bronze there. But this is a fair question. I mean, let's reverse this. You can show different kinds of investment styles. A lot of folks will reach out to a financial advisor and they might say, well, what are your kind of average returns? What can you achieve in the market? Can you beat what I've been doing by myself? Can you beat what, my other person has been doing? That's fine. That's one segment of folks out there. And those are legit questions. On the other hand, Dale, when you've asked people how much of your life savings would you be willing to lose if the markets go down? Could you lose 50,000 or 100,000 or 200,000 or 300,000? How much could you stomach because of the way you're exposed? How much would you be willing to lose dollar-wise? How many people to you say zero?
Well, I do get my share of those who, I don't want to lose any. But then I have ones, they could lose 300,000 and it won't really put a dent in their overall portfolio because they've got a decent amount, some 10, 20,000. But more importantly, we're looking at your risk level overall. So what can you handle risk wise? So usually we're looking at what percent. Sometimes people are tell their advisors, I want to keep more conservative, and they come in with these balanced portfolios, which a balanced portfolio is usually a 60% stock, 40% bonds. And what they don't realize, they're thinking that they might, in a big, market crash, might lose 10, maybe 10, 15% of their nest egg, right? Not a giant amount percentage wise. But in reality, a balanced portfolio can easily go down sometimes in excess of even 30%, like in the especially like back when the housing crash and things of that sort. So, that could make a bigger dent. So a lot of times I take the overall picture of what they have. I'm looking at, and we have a questionnaire we can put people through to help them get a good feeling of, how much risk they're willing to take. I would like to make this much, earn this much interest-wise. Okay, if you do, are you willing to take this percentage of loss? And it'll show the dollar amount based on if the person has, 100,000 or 500,000 or $1 million, whatever, invested. It'll give dollar amounts as well as a percentage amounts. Then we can use that to put together, their portfolio in line with their comfort level. Different people have different comfort levels. So I have ones they love the market, but a lot of them, that's their hobby. They study it, they watch it, they're on top of it. We're helping them do that as well. But then you have ones who they don't want to have to study the market or pay attention. They want to focus on their retirement, their family, the grandkids, and everything else they want to do. So,
It is a fair perspective that folks don't want to lose out on downturns in the market, but there's also being overly cautious, and that exactly is what your financial advisor is for. So they've got the hands on the steering wheel for you, so you can enjoy your retirement lifestyle. You can enjoy the grandkids. You can enjoy all the trips and everything you've ever wanted to do, or just not having to hit that 6 a.m. alarm during the work week. It's your retirement, but make sure that you're not being overly cautious with ups and downs in the market, depending on how you feel. Holding cash for peace of mind and retirement is a 50, 80, 100% strategy for retirement. Be careful because you have inflation. You're also missing out on the opportunity for growth much later down the road. Bronze medal theory for retirement at best, folks. Call the phone number. Let's make sure we've got a strategy that fits for you. 833-856-1382 is the number for you to call. We have folks who are standing by. It's not going to interrupt the program, but they'll schedule a time for you so you can sit down with the team here of Soutas Financial. More with Dale Soutas and Retire Your Way when we get back right after this. In your retirement spending plan, which accounts do you take from first to pay your monthly expenses? Your 401ks, 403bs, or 457s, or your IRAs, or your Roth accounts, investment, or savings accounts? Do you turn on your Social Security right away or delay? Do you use the growth from your mutual funds, ETFs, or bond funds first? Did you sell your business to create income, or do you have life insurance or annuity options? Or what about using HSAs for medical costs? Are you unclear if you have a retirement income strategy at all? You have accumulated assets for retirement for years. Now you need an efficient strategy to make certain these assets work together and last as long as you need them to. Call Dale Soutas of Retire Your Way and Soutas Financial for your own complimentary written income plan right away. 833-856-1382. That's 833-856-1382. Or you can write Dale at dale@soutas.com, SOUTAS.com.
Are you worried that you waited too late to start your retirement planning? That you waited too late to start saving? At Soutas Financial, we believe it's never too late to start planning for your future. We can help you develop a personalized retirement plan that is tailored to your current needs and goals. The team at Soutas Financial will sit down with you and provide an evaluation of your current path, including your investment strategy, tax planning, and risk management approach. We'll help you identify potential areas for improvement and work with you to create a retirement plan that is designed to help you work towards having financial security and peace of mind in retirement. It's not too late for you to get started with Soutas Financial. Call us today to schedule your complimentary retirement planning session. We believe we can help you get on the path to financial security and peace of mind in retirement. Call Dale Soutas and the team at Soutas Financial to get started on your own complimentary written financial plan. Call 833-856-1382. That's 833-856-1382.
Welcome back to Retire Your Way with Dale Soutas of Soutas Financial. Gold medal and silver medal and bronze medal strategies and things to think about for your retirement. Dale is the one who is awarding us the medals up on the medal stand. Well, I guess the national anthem across is always going to be the Star Spangled Banner because we're here in California, right? But at the medal ceremony, I want to know what you think of some of these retirement tools and decisions. What about, because I know we've talked over the last couple of years about Roth conversions. Roth conversions before retirement, gold, silver, or bronze decision for you?
Well, whether before or even after retirement, it can be very much a gold winner because you're reducing Uncle Sam's effect of your income over the long haul. So you're taking a proactive approach to your future, whereas many times we focus, like right now, a lot of people are focused on doing their taxes. They're doing tax preparation, and that's totally different than tax planning. So with tax preparation, you're just giving your CPA, accountant, or TurboTax, whatever you're using, you're giving them the info to see, well, what tax am I going to owe? And sometimes they will say, well, if you throw X amount of dollars into your IRA or both you and your spouse's IRA, you reduce your tax by X amount of dollars. And, oh, that's exciting. I pay less tax this year. Don't get all excited about that. You're deferring the tax on that money to a future time when likely tax rates will be higher. And if you're married and one of you passes away, you're going from the low married tax rates to the highest single tax rate. So you're creating a bigger tax bomb. So tax planning would be how to reduce your future taxes in retirement. And definitely Roth conversions can help you do that. Pay the tax today at the lower tax rates and have tax-free money to use in retirement.
I had a single, kind of a single person interesting question recently, and they heard all of the presentation and everything that you were doing, and they said, I can't wrap my head around it. You're trying to convince me to pay more taxes now. He said, there's no guarantee that tax rates are going to go up. I mean, so here was someone who believed, let's just say, in this administration, and that the moves are going to make are going to bring down the national debt, and it's not going to be as big of a worry, and this is just what everybody's saying right now. Okay, that's fair. That's a perspective. My job is to sit and listen to it, sit in that space for a second, go, what is they really saying? And how about this, Dale? Let's just say, for argument's sake, that taxes don't go up. I don't think that's going to happen, but let's say they don't. Do you still think it's a good strategy to do Roth conversions so you don't have to pay more tax on your Social Security and not have to pay or not even have to do RMDs? Is it a good strategy if taxes never change to do a Roth conversion?
I would still say yes. Again, everybody's different. I have a couple I've been working with now for the last year or so, and they finally are both retired. And as much as it would be wonderful to do some Roth conversions, it's not going to be practical. Why? Let's say you've got a couple 100,000 or 500,000, whatever, in your retirement account, and you want to start making conversions of that. Well, to convert that, I want you to, if you convert, let's say 50,000 of it this year, I don't want you reducing that 50,000 by the taxes, both federal and state. You're basically doing away with the real long-term advantage of converting that 50,000 because you're reducing it by the tax. I want you to be able to pay the tax from other sources, from savings, from other places. And so if a person doesn't have a large amount of savings or other liquidity to pull from to pay the tax next year, it may not be as easy or practical. Again, and it could be okay to have some of the tax withheld, but again, the age and the timing, there's too many things to look at. But basically, yes, it's still smart to get Uncle Sam out of that money as best as you can. I've yet to really meet somebody who thinks taxes won't eventually go up. So,
well, this was a naysayer on the opposite side. He said, you're making this assumption based on the fact that taxes will go up. I said, well, no, honestly, but for me, I can say this. For me, Spike, your radio host, when I started reading about Roth conversions and Roth 401ks in particular, pay the taxes now as opposed to later. Now, boy, Dale, if I could go back and talk to my 25-year-old self.
oh yeah,
Oh boy, if I could have talked to him and said, hey, you don't have as much income right now. You're sure you're going to pay your tax, but that means that you're going to get all that money tax-free later. Oh, if I could have talked to that guy in his 30s and moved to it. But now I am. I personally am putting everything I possibly can into Roth 401k because I want to create that tax-free bucket. And I am creating. I have been doing it for a long time now. But like many Americans, maybe that has passed or they're a year or 2 or 3 away from retirement. They say, look, the majority of my savings, nobody really told me about this or I never heard this message. And so a lot of what I have is already tax deferred. So you could possibly convert it. But when you talk about Roth conversions of, let's say, really large accounts, are you doing it all at one time? Because that could be really overwhelming to somebody.
Good question. Recently, I just talked to a client, and he did a great job of saving. And I mean, just in one of his accounts, he's got over $1.5 million, actually closer to $2 million, that's tax deferred. And they've got some money, some savings, and all that. Yet for other circumstances, we want to use that for other purposes. But so to convert that isn't really an easy thing. Plus, their income in retirement, because he has a pension, they both have Social Securities, they got some rental properties. So it wouldn't, they're just going to have to deal with the taxes on it over the long haul, unfortunately, because to do the conversions, they're really going to be pushing their income sky high right now. And with what they have, it would take a long time for that. So, they're not necessarily going to need large amounts from those accounts. So their minimums, they'll deal with it. But so it all depends. But converting as much as you can or not using the tax deferred strategies like traditional 401ks, traditional TSPs, 403bs, using the Roth versions if they offer them, is smart because then too, and if you're able to do the Roth conversions down the road, you don't have to take money out of those accounts if you don't want to and you don't need it. So there's a lot of things now. And sometimes to get around having to pay tax on even the RMDs, we're coaching people to make those RMDs go to qualified charities so that you satisfy the RMD, you don't pay a penny tax on it because it went to a charity. So there's a lot of different things that can be done. But not everybody has charities they want to give their RMDs or even a portion of it to. So it all depends. But doing Roth conversions, using and teaching our younger ones to save with tax-free vehicles like Roth versions or even properly structured life insurance like the millionaires use properly to basically keep Uncle Sam out of their savings and have money they can access tax-free. Those are things we need to teach our young ones as well.
So Roth conversions for your retirement strategy is a gold medal winner, but as Dale said, very specified to you. So before you go jumping down that ski jump on your own and just doing all of these Roth conversions at once, please speak with a CPA, a financial professional, somebody who can take a look at your bigger picture. As I'm looking at them right now. So
here's another thing. Throw this out to them.
Sure.
They can also request through us a free financial education movie video called The Power of Zero. It's all of 75 minutes, and it'll really help people understand this whole concept of tax-free versus tax-deferred much better and things that they can do even now. So that's something they can request, and they can get that access to that movie for free through us.
Okay, and so then they can watch that movie in the comfort of their own home, right? Just like watching Netflix, you're going to send them a code, and they can watch through it. So they can watch it with their sweetie sitting next to them. They can have a Power of Zero viewing party, just like Super Bowl, right?
Exactly.
So to get a complimentary copy of the link, so you can watch The Power of Zero. How powerful are zero tax tools for you in your retirement? Why don't you find out by watching this? 75 minutes of watching this information might change your retirement financial lifestyle. 833-856-1382 is the phone number. That's 833-856-1382. You can actually take a peek at the trailer, right, on your website at Soutas.com. I'll tell them, all right, at Soutas.com, look for The Power of Zero as well. SOUTAS.com. Click on that Power Zero, and if you're interested in it, there's a direct way right there to say, I would like to have a link to it. And when we come back, a couple of more things here in our gold, silver, bronze medal strategies for retirement. Guaranteed income annuities, Dale's thoughts on that. Delaying or taking Social Security early, gold, silver, bronze on that, and more when you get back with Dale Soutas here of Soutas Financial. Once again, that reminder for the phone number, you're not going to interrupt the program. We have folks who are standing by who will schedule that time for you. 833-856-1382, or you can go to the website to schedule your own time with the team at Soutas.com. More with Dale right after this. Which will you spend more money on in retirement, food or healthcare? Do you take your investments out of the stock market now that you are retired? Will your Social Security check be reduced in the future? How do you produce income from your nest egg to fight costs like taxes and inflation? At Soutas Financial, Dale Soutas and the team take the guessing out of retirement planning by devising a written plan that accounts for all of your concerns. The bigger question, are you going to be okay in retirement? Income, investments, Social Security, Medicare, longevity, healthcare. We cover these solutions and all of those other questions on your mind to answer, are you going to be okay in retirement? Call Dale Soutas of Soutas Financial and retire your way. 833-856-1382 for your own complimentary retirement plan meeting. 833-856-1382.
Do you know how you'll generate income from your investments along with your Social Security in retirement? In our opinion, it's never too early to start the income planning process for your future. An income plan can help you work towards creating a steady stream of income to support you throughout your retirement years. Take control today and start income planning for your retirement. Call the team at Soutas Financial so we can help you design a complimentary written income plan to help you live the retirement you've always wanted. Call 833-856-1382. That's 833-856-1382.
Welcome back to Retire Your Way with Dale Soutas of Soutas Financial. We're giving out medals today, just like the Olympics, on retirement planning strategies. I'm asking Dale, and he's the one who is awarding the medals here. What do you feel, Dale, as a financial advisor? As a financial advisor, because there's tends to be two different camps in the industry. There's annuity and insurance people, and there's portfolio managers, and not always do they see eye to eye. So gold, silver, or bronze, how do you feel about guaranteed income annuities for retirement income?
Well, they're vital. I mean, they're vital for having our income plan solid. I mean, when people start their Social Security, when they start a pension, what are those? Those are guaranteed retirement annuities. Guaranteed annuity income. So, we can, if Social Security isn't enough to make sure our income will last and keep up with inflation, if Social Security and pensions aren't enough, then many times it's very smart, even vital, to have some additional money to purchase some additional guaranteed lifetime income. And that you don't throw all your money into annuities by any stretch of the imagination, but you want to use them wisely, especially to make sure your income plan is solid. Because once people know that, hey, my income's going to keep growing, keeping up with inflation, I'll be able to, pay my bills, a paycheck, as we talk about. We'll be able to play and do the fun things we want to do. So paycheck and a play check. And when the play stops, we many times have ability for that income to have grown to such a degree, or have ability to turn on additional income to keep ones out of a nursing home. In other words, to pay for care, like at home or some kind of assisted living cruise ship on land. So they're vital in retirement for many people. But again, it all depends on the whole picture. Sometimes people have, like I was just talking about, there's a couple, they got great income with Social Security and pensions, and they really don't need any other income. So that's fine. But many don't have that same problem. We might need a tool to kick our income up so we know it'll keep going.
Yeah. Would you agree, as far as making the medal stand, that it works best as part of a plan, not your entire plan? Like if somebody is only talking to you about annuity tools, is that a little bit too much of concentration in one tool category?
Well, there's some out there that's the only tool that really they have. Okay, so it's kind of hard to show, the various tools.
You mean as far as professional representatives of these tools, meaning they're only licensed to talk about insurance stuff?
Correct.
Okay.
So if that's the case, then
that's probably the only tool they're going to talk about.
They're going to talk about that one tool. There's regular workshops and stuff, dinners and stuff where that's where their focus. And again, they do have their place, but we want to be careful because sometimes I've seen it in the past where ones will have people throw all their money into annuities, and now they don't have the liquidity for the short term that they should. So, we can put money under management, keep that liquid, keep it managed in the degree that, truly makes sense for you, not, for the other guy or what I think you should have, but, what's the proper risk level, a smoother ride in retirement, but keeping that money available. Annuities, there's ones who really badmouth them and make them sound like a four-letter word, but it's because they would rather manage your money and get the fees constantly forever off of you sometimes, instead of having a tool that isn't as easy to explain maybe to people. We can help you understand the different types of annuities, and there's types that we will not encourage you to ever use, but definitely having an annuity that you can turn income on for life. There's some tools that income can actually increase for your lifetime or joint lifetime. So there's some neat tools out there for that income purpose.
Would you say maybe at least a silver medal as far as you're concerned, as far as like reducing fear and producing income alongside your Social Security that you can count on, right? It's consistent.
I would kick it higher. I would actually kick it to gold, especially for the income purpose. Okay, because again, I've had people come in and one little lady said, she didn't like annuities. And I said, okay. And yet she's getting both Social Security and a little pension. So I told her at one point, I said, well, here's the phone number to Social Security. Call them up when you get home and tell them to stop sending you that money because you don't like annuities. And that's really what Social Security is. And do it likewise with your pension. So the point is they have their place. And for her plan, it did make sense to incorporate a small amount of her savings to create some additional income for her goals. For many, others, sometimes they don't need the annuities. Okay. So it's not like that's the main pitch or, product that we want to push on people. We can manage your money as well. We can help in a variety of ways. So, but they do have their place, especially when it comes to people whose income in retirement isn't sufficient on its own. So how do we create some additional income that's guaranteed for the rest of your life or lives?
All right. Thank you for that answer on that. And one last one here I think we'll have a little bit of time for. And this is going to be a specific strategy. So I'll put it in a very specific way. It's not just gold, silver, or bronze on Social Security. It's what kind of metal would you give to delaying your Social Security and letting it grow for a larger amount later down the road? Is that a gold, silver, or bronze metal idea for you as far as creating income for yourself in retirement? What's your initial thoughts?
For me?
No, I don't know. For our public out there listening.
Okay, so that's a good question. So are you single? Are you married? Whose Social Security is the bigger, than the others? So let's say in typical where the husband's Social Security is higher than the wife's because she did the hard work of raising the kids and he just went and made money, right? So now his Social Security is higher. And there are strategies still we can implement. And let's say if he starts his Social Security at full retirement age for most, if you're born 1960 or after, that's age 67. Then when she's 67, she can get half of that amount that of his full retirement amount. So if he's getting $2,000 at full retirement age, she would get $1,000. Now, what if he delays and he's getting, instead of $2,000, he's getting, $2,400, let's round it up, $2,500. Fine. But she's still going to get based off of his full retirement age, so that $1,000. But way down the road, because he delayed and had it go up higher, if he dies, she'll get the $2,500 or whatever it grows to and lose her little $1,000. So there's a lot of strategies to maximize Social Security. Sometimes I will encourage ones, go ahead and start it, at full retirement age. Sometimes if they're retiring young, maybe even, if you're not going to be working and worrying about other income or need other income, maybe even earlier, but that's not as often. People have to be careful. A lot of times they say, I'm going to start at 62 because that's when I can start it. Yeah, but you're still working. So when you make a little more than $20,000 for every couple dollars you earn, you're going to lose one of your Social Security dollars back to Uncle Sam. So you're defeating the purpose and you're reducing what you overall get over the long haul. And, Social Security, they're going to do something to shore it up down the road. All they have to do really, an easy fix is raise the limit on what we pay of our income into Social Security. Right now it's 180 in the 180 bracket.
Yeah.
If you make
keep
more than
talking,
180,000,
I'll look it up real quick.
Yeah, if you make it more than about 180,000, you don't pay into Social Security. Well, what if they raise that to $1 million? Yeah, the people making more money are squawk, but that would fix the problem with Social Security over the long haul. So they'll have to do something. If they don't do anything and they cut Social Security by 1/3, like the Baby Boomer Dilemma movie talks about, for everybody, the nation would go crazy and all the politicians would lose their jobs. So think about it. Be practical. They're going to do something. Don't jump and knee-jerk and start it real early. Know the options and know what maximizes Social Security for you and or your spouse. And that's what
184 is that number. 184.5,
184.
184,000.5 is where the taxation on your Social Security of your income stops. I've read some of these estimates as well. I think if they push it up to even just 200 or 225, 250, I mean, Social Security would be funded for the next 50 years. All of those are estimates. Don't quote me on it. But if they just bump that up, now it doesn't have to go all the way up to $1 million, doesn't have to go all the way up to 500, but there are small things they could do. But it is a worry. And if that is on your mind, please feel free to reach out to the show here. You can schedule a time. You can schedule a 15-minute phone call if you want to. You can come into the brand new offices. Brand new, because Dale's team is getting bigger. He needs more help to be able to help more of you out here in California. Call the phone number. Let's get you started on your review. Thank you so much for listening to today's program. Leave your wallet at home when you come in. Leave your purse at home. It's just a conversation about what's on your mind. Bring your notes, though. Bring your questions for us. 833-856-1382 is where you can make that appointment. There are folks standing by. It's all the time that we have today. Or if you want, you can schedule a time at the website on your own, Soutas.com, Soutas.com. For Dale Soutas, I'm Spike. We'll be back again next week.
Any reference to free or complimentary services/products does not obligate a prospective client to engage the firm or its representative for any future services. Any comments regarding safe and secure investments and/or guaranteed income streams refer only to fixed insurance products overseen by state insurance regulators and not any investment advisory products. Rates and guarantees provided by insurance products and annuities are subject to the financial strength of the issuing insurance company, not guaranteed by any bank or the FDIC. A Roth conversion may not be suitable for your situation. The primary goal in converting retirement assets into a Roth IRA is to reduce the future tax liability on the distributions you take in retirement or on the distributions of your beneficiaries. The information provided is to help you determine whether or not a Roth IRA conversion may be appropriate for your particular circumstances. Please review your retirement savings, tax, and estate/legacy planning strategies with your legal/tax advisor to be sure a Roth IRA conversion fits into your planning strategies. Qualified Charitable Distribution, QCD, is a direct transfer of funds from your IRA custodian, payable to a qualified charity. QCDs can be counted towards satisfying your required minimum distributions, RMDs, for the year, as long as certain rules are met. Some charities may not qualify for QCDs. First consult your tax advisor or the charity for its applicability. This is not endorsed or affiliated with the Social Security Administration or any U.S. government agency.
Investment advisory services are offered through Foundations Investment Advisors, LLC, Foundations, an SEC registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Any discussions of specific strategies are for informational purposes only and have been provided to help determine whether they may be appropriate for your specific situation. If applicable, the primary goal is converting retirement assets into a Roth IRA is to reduce the future tax liability on the distributions you take in retirement or on the distributions of your beneficiaries. Each individual investor's situation is different, and any ideas provided may not be appropriate for your particular circumstances. Comments regarding a particular client's experience may or may not be the same as another client's experience and is not an indication that any client or prospective client will experience the same or a higher level of future success or performance. Foundations only transacts business in those jurisdictions where it's properly registered or is excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Nothing herein constitutes a recommendation that any security, portfolio, or securities or investment strategy is suitable for any specific person. No legal or tax advice is provided. Please review your retirement, tax, and estate legacy planning strategies with a legal tax professional before transacting or implementing any strategies discussed herein. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to investment advisory products. Rates and guarantees provided by insurance products and annuities are subject to the financial strength of the issuing insurance company, not guaranteed by any bank or the FDIC. This is not endorsed or affiliated with the Social Security Administration, any federal Medicare program, nor any U.S. government agency. If applicable, we do not offer every plan available in your area, and contacting us at the phone numbers provided herein will direct you to a licensed insurance agent. Any information we provide is limited to those plans we do offer in your area. Please contact Medicare.gov or 1-800-MEDICARE to get information on all your options. All rights reserved.